Word on Wealth Radio Network.
This is the Word on Wealth with Gary Quackenbush of GQ Law. Gary is a San Diego financial solutions attorney, protecting people like you. The Word on Wealth team of financial experts is here to answer your questions and help preserve your family's financial future. Now,
you're live.
And happy Friday, everybody. Thank you so much for being part of the show. It's really great to get good listener feedback saying,
Monday.
Gary, we need this kind of stuff. And I appreciate it. So, and I also very much appreciate Noah, my producer, for being on the air and listening to me and helping me straighten things out. Noah, thanks for being here.
Speaking of helping you out, dude, you said it was Friday.
I did not.
Happy Monday. I mean, if you want to, if you can get this official, happy weekend, everybody.
This is so cool. It's Friday. No, it's not.
Right?
Oh, that's too funny. Happy Monday.
I mean, maybe you had a good weekend or you're really looking forward to next weekend.
Actually, I am. You know why? Anyway, yeah, next weekend's gonna be fantastic. Okay. But man, we got 5 days of shows to do between now and then.
We do.
Smokers. Well, today is our tax day. This is where we have Rich Mathurin from GQ Law. He joins us at the bottom of the hour, and he'll be right from the bottom of the hour to the top of the hour, talking about all things IRS. It's very interesting. So we got a couple of fun things to talk about today when that comes up. In the meantime, what we want to talk about is some stuff. So I was I go to court frequently enough that I know my way around, frequently enough that I know that it's a very, very expensive proposition. And I feel like, I feel like I should be kind of sending out warnings. So the purpose of the show, I mean, for everything, obviously I run a law firm, I'm a business, I don't do this for fun. My career objective is to provide essential legal services simply, affordably. That's our mantra. That's what we talk about at our law firm. That's what we talk about at our regular team meetings, is providing services that are essential, things that need to be done for people. One of my sons, Ryan, he's funny. He's has an MBA. He's really great. He's always been very inspirational to me. I mean, all my kids have, but Ryan in particular was saying, Dad, the services that you provide are for real people, and you should really hold to that, and you should be proud of that. You provide services. You're not out there trying to just stir things up and make a lot of money. You're out there trying to help people who really need legal help, and I think that's cool. So to have your, kid say, I'm really proud of you, Dad, of what you do. I mean, that's a big thing. That's a big deal for me. So, but that's kind of what I've been doing. That's my career. So what I am trying to do is send out kind of warnings to people and say, hey, kind of be alert to this situation because it is a big deal. I spend plenty of time in probate court dealing with trusts. Now, most people say, wait, Gary, if I have a trust, I don't go to probate, right? Not necessarily true. You do a trust so that you can avoid the probate process. True. However, if there's an issue with the trust, if there's an issue, something went wrong with the accounting or what the successor trustee is doing or what the beneficiaries are receiving, that's when you end up in court, asking a judge for instructions like, hey, judge, how do we handle this? This is some confusing language in this document, or we're concerned about what the trustee is doing or not doing. We're concerned about what the trustee is spending money on or not spending money on. We're concerned about the decisions the trustee is making. Those are different things where we're trying to figure out from the perspective of a beneficiary, is the trustee doing their job properly, and are the beneficiaries being treated properly? From the perspective of the successor trustee, we are in the position of saying, hey, successor trustee, this is how you do your job. So we get hired to do that quite often. Someone passes away, mom and dad have died, and now, big sister is the successor trustee. 99% of the time, big sister will have no idea what she's doing because she's never been a successor trustee. I have now, I think 3 times in 30 plus years, seen where people are being a successor trustee and this is their second time around. But that's it. That's in doing this hundreds and hundreds of times. Nobody knows what they're doing. That's the nature of the successor trustee thing. But we are taught that we're not taught how to do that. We're not taught to, kind of get help, I think. And so my kind of call out, and the purpose of this show is really to say, if you're a successor trustee, get help. I'm not saying you have to call Gary at GQ Law. I mean, I would love to do that. I would love to help you figure out how to get through. If you're halfway through or partway through, you're just getting started, you're wondering how it works. I'm happy to do that. That's my world. Okay. That's why we have our number 855-500-TRUST. But as a successor trustee, you have such a big job to do, and you're not going to know how to do it because you are not a professional yet. You're going to be held to the standard of a professional. Crazy, right? You're not a professional, but you're going to be held to that standard because the California Probate Code says that if somebody is handling somebody else's money, you are a fiduciary. It's just like that you did that for a living.
2 minutes.
So you're going to be held to that standard. Know what you're doing. As a successor trustee, the thing that you are not entitled to do is just start writing checks to people. That's just a bad idea. I deal with many, many people who say, oh, no, Gary, I don't need your help because my siblings and I get along just fine. We really love each other. We spend time together. We trust each other. They all trust me. So what I did is I went into dad's bank account and, after mom and dad had both died, and we just divided it by 3. And I sent checks to everybody. And then we sold the house and we divided it by 3 and we sent checks to everybody. And then we sold the car and we divided it by 3 and sent checks to everybody. But then there was a problem because a creditor came in and said, hey, your dad owes me, $4,600 on a credit card or a loan that he paid to me. Oh, well, I've already given all the money out to my siblings. Well, too bad. You're the successor trustee. You've got a problem now because that money needs to be paid to that creditor. You can't avoid creditors.
1 minute.
Creditors get paid before beneficiaries. So now as the successor trustee, you've got to backtrack, talk to your siblings and say, hey, oops, I gave you too much. Would you guys mind each sending me, $1,500 so that I can pay dad's bill? Well, that's going to only go so far because if you have an uncooperative beneficiary or a young beneficiary, or they don't send you the money back, they don't have to. They can say, that's not my problem, trustee. You gave me the money. That is your problem. You pay it. It was your job to do it right. And then you file the tax return and find out, oops, there's taxes owed. You got to figure out how to pay those. You've already given the money out. There's some issue that comes up. There's an issue with a tenant. There's a lawsuit. So the questions I always say is, if you're the successor trustee, did you notify the Department of Health Services that your dad and mom passed away? Did you file the right deeds? Did you notify creditors? Did you publish it in the newspaper? All the things you're supposed to do. We're going to keep talking about that coming up next here on the Word on Wealth, 855-500-TRUST.
You don't need to know everything. You just need to know where to find answers you can trust when you need them. Welcome to the Word on Wealth with Gary Quackenbush. We're here to help you build, protect, and transfer everything you've worked hard for with expert estate planning, trust administration, inheritance, and probate. Call Gary and the team at gqlaw.com. 855-500-TRUST.
You're saving and investing for the future, and that's good. Have you ever stopped to think, where does my money actually go? This is faith-based investing with Anthony Wright.
Most Christians just don't understand that the money they save for retirement usually helps fund the abortion industry and other liberal anti-family causes. But did you know that with just a few minutes of your time, we can screen and clean your investments at no cost to you? It's absolutely complimentary. Just go to the website right now, download a free copy of my book, Faith-Based Investing. It's free as well. You deserve to know the truth as the investor. Then the choice is yours. You can keep doing what you're doing, or you can line up your investments and life savings with your beliefs. We are fiduciary investment advisors. You can feel good about investing with confidence. So learn more now. Go to BibleSafeInvesting.com or call me at 931-RETIRED. Your free book is waiting for you. Go to BibleSafeInvesting.com and be sure that you listen to Faith-Based Investing this weekend right here on Family Talk.
So Gary, we've talked a long time about estate administration. So what is that and why is it important?
Estate administration is the distribution part of estate planning. So when someone passes away and they leave money to beneficiaries, the property has to be administered. So it's like taking it from the decedent to the survivor. That's called the estate administration process. So usually you're going to have a successor trustee that's named in the trust. So have no idea what they're doing because they've never done it before. So then they call on GQ Law and we walk them step by step on how to be a successful and good successor trustee. We also do the required notifications. We notify the Department of Health Services and all the legal requirements so that they can have the estate administration done properly. We help successor trustees be successful.
Call or click to request your free consultation. GQlaw.com, 855-500-TRUST, GQlaw.com.
Who will you trust with the biggest financial decision of your lifetime? If you're planning to buy or sell a home in San Diego County, do what I do and work with the true San Diego real estate. Ken Pecos and the Pecos Group helped me and my family. They can help you. This is Gary Quackenbush of the Word on Wealth. You hear Ken every week here on the Word on Wealth. He's our expert. He's got integrity, exceptional service, deep knowledge of the San Diego, Coronado, and South Bay regions. These are just some of the reasons that Ken Pecos has completed hundreds of transactions. He manages a powerful team of professionals at the Pecos Group, from single-family attached homes to luxury high-value waterfront properties to apartment buildings. Ken Pecos is ready to help you avoid problems and costly mistakes. Learn more online at kenpecos.com. That's Ken Pecos, Pecus.com. Or call 619-977-8419.
DRE number 010566969, brokered by eXp Realty.
Hey y'all, Andrea Kay here for Iron Mountain Outfitters in La Mesa. Spring has sprung and there's no better place to get
you need. Call Gary and the team at GQ Law, 855-500-TRUST, or go online and download Gary's free ebooks and videos. Read Gary's blogs. Call or click to request your free consultation or to talk with a member of the GQ team. That's GQlaw.com, 855-500-TRUST.
We're live.
All right. Happy Monday. Got it right this time. Happy Monday, everybody. Good to have you along. This is Gary Quackenbush here on your host of the Word on Wealth. On Mondays, we are doing taxes. On Tuesday, estate planning 100% of the time. Wednesday, we have Ken Pecos of the Pecos Group, who is the most incredible real estate agent, who is more like a real estate consultant, like a real estate investment consultant. Like, is it a good idea? Is it a bad idea? What's your return on investment? Ken is really fun to talk to. And that's going to be our Wednesday show. Thursday, we have Anthony Wright, who's our investment finance fiduciary guru. And Friday, we will have Edwin Edabiri, the CEO of Happiness. So all good stuff coming up this week. We're glad that you're listening and hope you can just tune in as much as you can. If you miss the show, then you can go to our podcast, which is on any podcast platform, whether it's going to be Spotify, Apple, Google podcast, any of those. And you can go and just find the podcast you're looking for by description or date. Just remember what date you heard it, and you can go back and you can re-listen to the show in the form of a podcast. So it's all fun. That's what we're doing to get the word out to you guys and make sure that everybody's kind of doing what's supposed to happen. So continue our conversation about what a successor trustee's job is. I think it's important because when you are, for a couple of reasons. One, if you're setting up an estate plan, you need to decide who's going to be your successor trustee. That's the person that's going to be managing your stuff when you can't, because you're either going to be incapacitated, that's 70% chance of that, or you'll be dead. There's 100% chance of that. So your successor trustee's job then is going to be some very specific tasks. Every successor trustee that I've ever dealt with, maybe minus one, it was their first time. All first timers. That's the way we do. It's like, there's just certain things that we'll only do once in our life. And to me, if you're learning a skill and you're only going to do it once in your life, why would you ever try to do it without instructions? People watch videos, they talk to friends, they go and observe, whatever. If you're going to do something only once in your life, you want to get it right. And in this case, if you're going to be a successor trustee, it's probably the only time in your life you're going to do it. So it doesn't do any good to, hey, I'm just going to do this once and next time I'll be better at it. No, you have to be right the first time. So if you're a beneficiary getting, the information from a successor trustee, or if you're the successor trustee trying to get it together and do your job as the successor trustee, that's what we're talking about in today's show. Okay. What to watch out for as a successor trustee and as a beneficiary watching what the successor trustee is up to is the law requires that within 30 days of the date of death, the will, if there's an original will, the original has to be filed with the court. It's called a will deposit. They send the will original to the court that's closest to where the person lived. It's either where their assets are or where they lived. If mom moved to, I don't know, up to Sacramento for the last, year of her life and then passed away up there, if she still has property down here, the jurisdiction is going to be down here where her property is and where she's lived her whole life. So the will gets deposited with the court. That makes it public record. Yes, somebody can go to court, pull the will, and they can read it. And what are they going to find out? They're going to probably find out who her kids are. They're probably going to find out that she has a trust, because it'll say, I give my entire estate to my trust called the Mom's Trust dated 2022. Okay. So that's all they're going to get out of a will. There's not much else. It just isn't. So pour over will, being recorded, big deal. It happens. You're supposed to do it. Gets filed. That's a job the trustee needs to do within 30 days. Okay. Is it critical? Does it cause problems if you don't? My answer is it is one of your jobs. So if you want to be a successful successor trustee, you do your job. Number one, you file that will. Okay. Because if you don't, well, if a beneficiary is looking at you, it's saying, where's the will? I don't see it filed. Well, that's strike number one. Okay. Number two, within 60 days of the date of death, California Probate Code says that you, as the successor trustee, are required to provide notification to all beneficiaries of the terms of the trust. And in that notice, there's specific language that has to be included, and it has to be in 12-point font or larger, and it has to say the following, and there's specific text you have to say. So that notice goes out. It doesn't matter that you sent them a trust already, a copy of the trust. Well, my brothers and sisters already have a copy of the trust. I don't care. The law says you must give them notice of the terms of the trust. Okay, so that's the minimum. You send the notice with this specific language saying that, you have a right to review the terms of the trust. And if you request a copy from me, I'm supposed to provide it to you. And then once you get it, you have 60 additional days to review, or 120 days from the date of this notice, whichever is longer. So I just have you send a copy of the trust with the notice saying, I'm required to tell you the terms of the trust. And by the way, I have attached the trust. You've got 30 days to do something about it. Okay. That makes it so that the 30-day thing, 120 days to do something about it. That makes it so this 120-day notice period starts to run. If you've never done that, you're not the first person. Okay. You're not the first one that's failed to do that. I'll have people, quite often say, oh gosh, I didn't know I had to do that. What do I do? I said, you do it now. I don't care if it's a year late or 2 years late. I don't care. You have to do it now because the court, the probate code requires it. So you do it. You got a 120-day waiting period. Is that going to slow things down? Well, it depends on what you had done before that. The other thing is, under the law, you are required to notify the Department of Health Services that this person has passed away. So that's done. You can do it electronically. You can do it on paper. But you're notifying the Department of Health Services and saying, are you going to make an estate recovery claim against this person's money? And they're going to respond back. And if you do it electronically, they respond back electronically and say yes or no. And if it's a yes, they're going to say how much money they want. And then you can deal with that claim and decide that it's okay. You want to go ahead and pay it, or you want to fight it. If that's not done, that may be something that I was talking about earlier that may come back to bite you, because if you thinking everything's fine and you and your siblings are all happy lovey and you did your thing and you gave everybody their 1/3 share, and then the Department of Health Services comes back and says, hey, where's our money? You owe us, your dad had $9,000 of subsidies from the Department of Health Services. We want our money. Now that's when you got to go back to your siblings and say, hey, I need you guys each to cough up 1/3 of this thing. And your siblings can say no. Bottom line, they can just say, nope, sorry. You've already distributed the money to us and we don't have to give it back, which is true, which is frustratingly true. So you want to make sure you have enough money always reserved to pay taxes, pay medical bills, utility bills, whatever's left over. So you're doing these two things. You're filing the will. Within 30 days, you're giving notification to all the beneficiaries of the terms of the trust for a 120-day period. You're doing a creditor notification. You got to notify the Department of Health Services. And then the other thing that I always do is we publish a notice in a local newspaper that's created for legal notices. And that legal notice will say, so-and-so died. If you're a creditor of his, or if you have a claim against his estate, you have 120 days to do it and send the claim to GQ Law Corporation, whatever. And they have that. So that cuts off their claims. If nobody makes a claim, or if somebody sues you later and says, oh, I slipped and fell on your grandpa's lawn or your dad's lawn and I need to be paid. You say, well, you're too late because we already gave the cutoff already came and went and you didn't notice it. We publish it in a newspaper and you didn't see it. That's your problem. So these are things you want to do to protect yourself as the trustee, because you really want your goal at the end of this thing. Your goal is to be done, not have to worry about it anymore and be released, relieved, let go of your responsibility as trustee. Okay. Another big thing, the biggest thing, is to prepare an accounting of all the trust assets. And I want to talk about that specifically. I'm going to talk about this more on tomorrow's show. I'm going to get specifically into what that means to account for assets. But just think of it this way. Your mom and dad have passed away. When the second one passed away, they had money. It's going to be in their personal bank account, their trust bank account, their shoes, in their drawer, jewelry, clothing. All of that stuff is part of their estate that's going to be managed or administered through the trust. Okay. You, as the successor trustee, have the job, the requirement to account for everything. And I don't mean you're going to say pair of socks with hole, 10 cents, pair of socks without hole, 25 cents. I don't mean that. You can say, clothing and all that stuff, nothing fancy, and give it an estimated number. But you're doing an accounting of all the assets. At the date of death, dad had X amount of money in his retirement account, and he had X amount of money in his checking account, and mom had this amount of money. So you're doing this date of death valuation of all the property, and then you're providing an accounting of what happened to that money. If the bank paid interest, you're going to add that into the account. If 6 months later, you found another bank account, like, oh my gosh, dad had an account at this bank over here, and you didn't know it, that's okay. We're adding it to the inventory, putting it in. So you're basically gathering all of his assets, and that may take a long time. Sometimes it takes months. Sometimes I talk to clients that, it's a year later when they get this
2 minutes
interest earning statement that says, whoa, you made $175 in interest. And you look at it and go, oh no, dad had a bank account over here. We didn't know that. So you have to add that to the inventory. So sometimes things just get added in later, because you don't discover them till later. And that's cool. You can take care of that. Okay. But the accounting is every penny that you spent, like what you actually did with that money. That is part of your stewardship as the successor trustee. Okay. Flip side, as a beneficiary, you have the legal right to have an accounting provided to you. If your trustee hasn't provided an accounting and it's been, 6 months, 12 months, You say, hey, I want to know what's going on. I'd like an accounting. I'd like you to tell me everything that's in the trust and what have you spent. That's called a demand for accounting, and that needs to be responded to within 60 days. So then they provide you an accounting, you look at it and see if it's okay. But see, those are all the things to be looking at to get right. We got to do the accounting, you do the department of the notifications to creditors, Department of Health Services, formally notifying all the beneficiaries. That's all stuff that needs to be done in a trust. So if it's not happening, then let's just do it. Let's get it done. Even though it's, after the deadlines, whatever, that's not, necessarily fatal, but we need to get that stuff moving. So eventually you can be released from your job. If you're a beneficiary and you haven't seen this going on, you got to work with a successor trustee on this. They got your money, but just don't be waiting, 2 years from now and say, gosh, it's really weird. Nothing's happened. Get on it sooner and make sure, help them do their job. You can call us at 855-500-TRUST. And tomorrow we're going to be listening to, we're going to be talking about this more specifically, like really what is in accounting? Like what are we quote accounting for? All right, coming up next, you got Rich Mathurin of GQ Law. We're going to be talking about some tax stuff. If you've got questions for Rich, you can call and be part of the show at 888-344-1170. Coming up next, Rich Mathurin of GQ Law.
You've got questions. We've got answers. This is the Word on Wealth with Gary Quackenbush of GQ Law. Gary's here to give you peace of mind with expert estate planning, trust administration, inheritance, and probate. Call Gary to build, protect, and transfer your wealth. 855-500-TRUST. GQlaw.com.
With SRN News, I'm Keith Peters reporting. Senator Tim Scott says he sees a hunger for something positive as he prepares to make his run for the GOP's 2020.
GQlaw.com.
Hey, welcome to Word on Wealth. This is Gary Quackenbush. And we got Rich Mathurin. I told you he'd be here. It's tax day with Rich. Hey, Rich, how you doing today?
Great, Gary.
Oh, it's so good to have you here. It's just more fun to do the show with a person. So Rich is he's our tax attorney at GQ Law. And if you want to get a hold of him directly, you can call our tax hotline. That's 855-500-TRUST. 855-500-TRUST. And if you really want to ask a question like today, you can call and be part of the show. It's 888-344-1170. I would ask Rich, I get this newsletter we shared in the office called the Kiplinger Tax Letter, and everything's kind of, it's everything's kind of brief. It's like these briefs of things that are going on in the world. And they always have a section, which we just think is the most fascinating. And that is on the IRS enforcement stuff, because it has to do with taxes. So Rich, we, the article, and I just want to get Rich, your comment on this is we have the IRS, they got this pledge from Congress that they, over the next 10 years, will receive $80 billion into their enforcement pool. They get $80 billion over the next 10 years to be used for enforcement. So first of all, I want you to tell our listeners, like, what does that mean if the IRS is using it for enforcement? What does that mean? And then we'll get into this little audit thing. So what are they talking about when it says the IRS is going to use money for enforcement?
Well, I think if you don't get into a voluntary arrangement with them, whether it be an installment agreement or an offer in compromise or possibly a non-collectible status, then they are going to take involuntary collection matters, whether it be a levy, liens, garnishments. They do have the ability to garnish Social Security wages. That's one thing I would, Social Security payments.
Yeah.
They can garnish 15% of those. So they do have a lot of tools available to them. Plus, like we've talked about, they don't need to get a judge's court order to do such things. I have noticed quite an uptick in the local revenue officers here in San Diego County who are starting to come after our clients that have balances usually over 100,000. But I don't think that they say they're not going to target the lower balance people, but with $80 billion, they can cast a wide net.
That's interesting. The whole concept is kind of interesting, right? It's like, give the IRS 80 billion to go collect money, but the IRS collects, and I can't remember what the number, but the number is somewhere around the neighborhood of like 16 to 17 trillion dollars a year is what they're collecting. So I guess 80 billion here, billion there. Eventually it adds up to $1 trillion, right? It's funny. So then the term then enforcement, I guess we focus on the middle, enforcement, because if they're talking about forcing you to pay, they don't have to get a judgment. I like how you're saying that. So like if it's like if I owed you money, so you loaned me money and I said, oh, Rich, I need money for business development or whatever. And then I borrow $5,000 from you. If I just say, forget it, I'm never going to pay you back again, what do you have to do to get the money from me?
You have to bring a collection lawsuit against you in the civil court of whatever county I reside in. And then would probably get what they call a default judgment if you don't show up or present evidence that you don't owe the debt. And once I get that default judgment, then after that, I could do my own collection methods, which normally would be leaning or garnishment or whatever. But you're probably talking a year and a half process at the earliest to be able to collect even on a $500 debt.
Okay, now turntables, and I know this is your favorite thing. Now pretend you're the IRS and I owe you $5,000.
Well, they're going to notice that you owe the money, and they're going to sort of ask nicely that you pay it. And then they're going to send you a series of notices that's going to end up with probably a 30-day, either you pay or get into a payment arrangement, or they are going to take collection involuntary collection activities against you, like we talked about, whether it's the garnishment, the levy, the lien, and again,
but no judge. They don't have to go to a judge and prove anything, right?
No. As long as the tax has been assessed and you aren't appealing it or whatever, or in bankruptcy, they can do as they want without a judge's order.
But what if the IRS is just wrong? I mean, I didn't file that return, or I did my return properly, and then here they come after me and they say, hey, you screwed up your return, Quackenbush, and now they're collecting me. I don't think I owe this money. I don't want to pay it. Does the IRS really care?
Well, you do have appeal rights, but
Okay.
those appeal rights expire after a short period of time. Bankruptcy would stop collection activities, or we talked about the other types of get into some type of an arrangement with them, whether it's an installment agreement, whether it's a offer and compromise. Those will stop the involuntary collections.
But the bottom line is, if I ignore it and I just go, the mailman's coming to the door. I mean, let's see. Yeah, like the original thing when I asked you, like, if I owe you $5,000 and you're trying to get it from me, you have to actually find me and serve me with paperwork. With the IRS, they don't have to find me. They just send it to my last known address.
Yeah.
And so, but even if it's wrong, if I just say, this is dumb, I'm not going to pay it, this involuntary collection stuff, it's interesting. It seems pretty powerful. I mean, what about, what is this thing where the IRS, if you owe them more than like $55,000, that they can actually take away your visa or suspend your visa?
Yeah, and that's one thing that a lot of our clients like get alerted to when they try to travel overseas. I believe in the 2015 Transportation Act, which has nothing to really do with taxes, they stuck in this thing that gave the IRS the ability, if your balance is owing is 50,000 or more and you haven't made any attempts to get into some type of payment plan or deal with your tax balance, they can suspend your passport, and the State Department does not have to issue it until the IRS releases it. Again, the only way to do that is to get into a payment plan with them. I believe only an accepted offer and compromise would release it. A bankruptcy filing would release it. But if you just do nothing, they don't have to release it. And it's through this 2015 Transportation Act.
That's wild. And I've always wondered, because I don't actually know. I'm always wondering when you find that out. I mean, do you get a notice ahead of time that says, because I know the notice that says you're under the Transportation Act, if you owe more than 50,000, we have the right to like suspend. I'm wondering, do they actually send you a notice that says your passport is suspended? Or when you go to get on the plane and the TSA scans the passport and they go, dude, you owe $52,000 to the IRS, get in that other line over there.
I believe they do send a notice. It's like a sort of on the first page. It looks like they have like a black thing, and they call it they use the acronym FAST, federal something under the FAST rule, that your passport has been suspended. So that I do believe they do alert you once that's been done. But I don't think people kind of realize it until they go to the airport and their flight to Cancun is canceled.
You think it's embarrassing to go through TSA when they're asking you to stand still and smile or take off your mask. It's like, oh, that'd be horrible. Anyway, but I mean, that's the world we live in. I mean, the IRS has a lot of power. It's all administrative. They don't have to get a judge's signature or anything like that. But
I don't know if it was you telling me or if I read this somewhere, but that has been incredibly successful for them. This suspension of passport has gotten people to deal. It's worked in the way they wanted to, getting people to deal with their tax balances, and it has been very, very effective.
That's so interesting, and it makes sense. It's funny. It's just I mean, it does make sense. So I'm going to go on to, this is a little more I don't know. It's just entertaining to me. So this is another thing in our news rag. So the IRS, if you remember, there's this Form 1023 where if you want to be a nonprofit, there's this thing, gosh, it was just a few years ago where people were filing for nonprofit status, which is they're saying, we're a nonprofit religious organization, or a nonprofit, public benefit corporation. And so we want to be considered nonprofit, and therefore our tax status is different and we don't pay as much taxes and all that kind of stuff. So there was this big stink that came out several years ago where people were saying, hey, you're only giving nonprofit status to these particular people here, and you're discriminating against us. And the IRS kind of got tangled up in that web. So then they decided, okay, we're going to do a EZ form, a 1023 EZ form, so that you can become a nonprofit much easier. And they were much more liberal about saying, see, we're really nice. We're giving nonprofit status to a whole bunch of people. Well, there's this one came out in the news thing this morning where this happened in tax court, is there was an organization and they applied to be a tax exempt church. And the group says, they're offering spiritual growth and healing rights through the consumption of ayahuasca, which is a type of tea. Well, that was actually the name of their church, ayahuasca Church. So they ended up getting in trouble because during the audit and this examination by the IRS, they determined that the tea, so funny. I mean, I don't drink tea anyways, Rich, but it says here, because it had, let's see, it was dimethyltryptamine, which is a class 1 controllable substance under the Controlled Substance Act, that made it so that they weren't really a church getting spiritual. They were a company getting high. So they didn't shut them down. They just said, pay your tax. And by the way, you're not a nonprofit anymore. So
maybe the tea helped them deal with their taxes.
That's right. That's another
Forget
solution.
their taxes.
That's right. They forgot their taxes, and oh my gosh. Anyway, so the IRS is, they're all over this stuff. But on a more serious note, the next thing we're gonna talk about is the IRS audit rate. I always think this is fascinating because the IRS comes out with these statement saying, we audit X amount of, X percentage of tax returns, individuals, corporations, or whatever. And they've made some, I think it's funny. It's the declaration. They've made some pledges that they're not going to audit certain people above what they used to do in 2018. So we're going to talk to Rich about that when we get back in just a second. You're talking to Rich Mathurin and Gary Quackenbush of GQ Law. The number is 855-500-TRUST. If you want to get an appointment with Rich, talk about your taxes, 855-500-TRUST. Coming up next, audits.
You don't need to know everything. You just need to know where to find answers you can trust when you need them. Welcome to the Word on Well with Gary Quackenbush. We're here to help you build, protect, and transfer everything you've worked hard for with expert estate planning, trust administration, inheritance, and probate. Call Gary and the team at gqlaw.com. 855-500-TRUST.
Gary, your team at GQ Law are experts at solving IRS and state tax problems. Talk about that.
When people have a tax problem, it tends to really stress them out. And one of the things we've been able to do is figure out how to resolve tax problems. One thing we might be doing is setting up a payment plan or getting a collection delay, maybe getting a determination that the person shouldn't have to pay the taxes at all. We do offers and compromise. We do audit reconsiderations. And one of the things that's a really powerful tool that some people don't recognize is sometimes bankruptcy can be used to actually eliminate taxes when there's certain conditions of the code that are met. So we can do all kinds of things. After we analyze your situation, we can figure out what's available, discuss your options, and figure out which ones to implement, what it's going to cost, how long it's going to take. And we can get people out from under all kinds of tax problems so they can sleep again. That's our goal.
Request your free initial consultation. gqlaw.com. 855-500-TRUST. gqlaw.com.
You're not alone. Ask for the legal help you need. Call Gary and the team at GQ Law, 855-500-TRUST, or go online and download Gary's free ebooks and videos. Read Gary's blogs. Call or click to request your free consultation or to talk with a member of the GQ team. That's gqlaw.com, 855.
You're live.
All right. Welcome. Happy Monday. Today's tax day on the Word of Wealth. We got Rich Mathurin. He's our tax attorney here at GQ Law. And so he's here with us. If you have questions for Rich, you can call us at 888-344-1170 and ask your question. I know a lot of people are listening and you're going, I don't want to ask a question. Just come up with a pretend name. And, so I have a friend that owes money. All right, so we're talking about some of this newsletter that Rich and I got, and the IRS, they've got an $80 billion windfall that they received from Congress, where they have $80 billion over the next 10 years added to their enforcement budget. Now, the IRS is pretty big. They employ about 186,000 people. They collect about, I think it's $17 trillion a year. There's only two organizations in the U.S. government that make any money net positive. One is the IRS and the other is the DEA. I've said that before, right, Rich?
Yeah, I think a couple of times.
About like every show. Rich is like rolling his eyes. So that's a bit of trivia. Why is the DEA money making? How do they make their money? Drug Enforcement Agency.
Property seizures.
Isn't that crazy? It's like, stick it to them, take their Porsches. Anyway, so in the newsletter, it was talking about that the IRS has pledged that even though they got $80 billion more to do enforced collections, they're not going to increase the number of audits that they're doing on individuals, corporations, and partnerships. They're going to keep it the level they were at in 2018, which is before the pandemic. So I don't know. As far as like the IRS had, they had all their cutbacks, but now they have this extra money. Does it seem to you then, if they're trying to use all the 80 billion on enforcement and they're not going to increase their audits, it seems like it's just going to go to trying to collect money rather than auditing.
Yeah, I think there's a lot, I think that we talk about it is that 18 to 20 million people owe back taxes, and the tax gap
Wow.
that they always talk about is some huge, like a 700 to $1 trillion, 700 million to $1 trillion, I believe is better the tax gap.
Yeah.
But there's a lot of money that out there that they need to collect. And I think one thing that we've talked about is they only have 10 years from the date of assessment to
Right.
collect. So they want to get on this, and they've basically lost 2 years in collection. So I assume they're going to ramp up their collections.
That makes, I hadn't thought about that. That makes a lot of sense. They're like 2 years shorter on their collection statute because they didn't do anything for a couple of years. With the, yeah, I mean, we always talk in business, like, or anything. It's like, go to the low hanging fruit. Audits are not low hanging fruit necessarily because they have to do a lot of work and audit and look at records and all that. And yet there's this $800 million to $800 billion to $1 trillion money sitting out there not collected. It's owed. They used to send out notices during the pandemic. They didn't send out very many, and they're picking that back up. I'm trying to figure out a way to kind of inspire people, Rich, to, if they owed taxes prior to the pandemic and everything's been quiet, is it even reasonable for them to believe the IRS just forgot about them?
No, definitely not. Again, I've seen the activity pick up, particularly on our higher balance tax owing clients. But I think, they're gonna probably start out with the notices. Hey, please, this is an update. You owe this. But I think they're going to get more and more aggressive as the year goes on. And I think they will do the involuntary collections if you don't start contacting them, sometime this summer. I really believe that like you talk about low hanging fruit, a lot of people have just ignored it and stuff. And, they are earning, they do have the ability, at least some ability to pay back some or all of their taxes. And the IRS is just not going to forget it. As we know, also the franchise tax board of the state of California has been very aggressive throughout these things. So if you have IRS issues, you probably have FTB issues. My suggestion is deal with them both, because you have to pay one, and the other one will give you credit for if you're in a payment plan with one or the other. So try to deal with them both. But usually people that have IRS issues have FTB issues also. So I would suggest getting on it, because I think the worst thing is when a client calls me and the FTB took $1,300 from my account on Friday, and my rent check is going to bounce. It's hard for me to do a lot once they've already taken the money. The FTB doesn't give it back. I usually can get the IRS, if you can get into some type of a payment plan or non-collectible status, where I usually can get the IRS to rescind some or all of the levy. But the FTB is vicious. Once they have the money, they're keeping it.
Yeah, no, that's for sure. And it's like, you don't want to believe you have a tax problem. You don't want to have to deal with it. You don't want to have to pay the money, but it's not going to go away unless it's like almost 10 years. So that's going to be, if you had a tax that was due for like a 2012 tax return, 2012 tax return was due in 2013. And if it was due in 2013, so now we're at 2023. So, that might be 10 years past the statute. It depends on if they audited you or if you filed the return late. But, if it's anything newer than that, they still have time to collect. And what we've seen too is the IRS, they know which ones they're going to run out of time on. So the computers are trying to check and see, we're running out of time on these big dollar ones. Are they going to be, low hanging fruit? Do we think the IRS knows how much money you make? I mean, as soon as you hire on anywhere in California, the employer is required within 10 days to notify the franchise tax board where you work and your social security number, and so they know where you're making your money, and then the franchise tax board shares that money, that information with the IRS. So it's not like you can have a job anywhere and just kind of secretly make money. it's not like you want to be jumping jobs, because then, good luck after about 3 jumps, you're not going to get another job. But it's really important to get on it early. And if you owed in the past and the IRS is quiet, Rich has a way that he can figure out where they are. So talk about that a little bit, Rich. Like, okay, it's been quiet, they're not being chased around, and maybe it's been a year or two. How do we know whether the IRS ran out of time or whether they're coming after them collections? Is there something you can do to check back? I mean, talk about a report that you can get for that.
Once we get a IRS power of attorney on file with the IRS, we can run your tax report and gives us 22, back through like 2000, all of your tax balances owing, when they might expire under the statute of limitation, any tolling events which would stop the statute from running, i.e. a bankruptcy or an offer and compromise submission, things like that, penalties and interest, whether you might be eligible for a penalty abatement first time, penalty abatement, your payment history, your wage and income for about the last 10 years. So showing and whether you filed. So that would tell you, if you needed to recreate a tax return from back in 2015 or something like that, we can do that. So it's a very, very detailed report, whether the balances would be dischargeable under a bankruptcy. So a lot of information on that. And one thing I want to emphasize, Gary, maybe I'm tooting my own horn, but I've had a lot of good luck lately with offers, with payment plans.
Yes.
Nothing is going to be free and easy type of thing, but if you deal with it, I mean, it's something the IRS just wants you to get into compliance current for the past and then be compliant going forward. They're not trying to ruin you type of thing, but if you do bury your head in the sand, that's when they'll do these levies where you don't know that it's coming and you'll bounce your rent check. So, but like I said, I've had good luck working with the IRS, working with the FTB on setting up, whether we talk about a payment plan, an offer, a bankruptcy type of thing, there are a lot of solutions. And like I said, I've had good luck. Maybe they're more easy to deal with because of the pandemic, but I also like to think that I do a hard work and I try to really review the client's account and kind of advise them on the best solution. I think that's the most important thing, to do the diagnosis, figure out what you do and see what the best solution is. Maybe, maybe you are an offer candidate. Maybe you are a bankruptcy candidate. You get a lot of bang for your buck with a bankruptcy. If I can discharge a number of tax years for a bankruptcy filing plus the court filing fee, that's a huge savings for a taxpayer and kind of help you sleep at night.
Yeah. And along those lines too, I guess if you were using the bankruptcy as your method to, reduce the taxes or potentially eliminate them, then while you're at it, all your other debts will go away too. You got your, if you have credit cards or unsecured debts or things like that, it all goes away in the same process. And
releases the passport too, that we talked about earlier.
That's right. Releases the passport. So then you can go and travel with the money that you don't have.
Yeah. Like we've talked about earlier, I've had really good luck lately with the offers. I've had 2 accepted in the last, I'd say 45 days. And again, this is a huge thing. We're talking the clients owed several hundred thousands of dollars, and we settled for something. They make an initial down payment, and then they have 5 months after acceptance to pay it off. And usually, it's a huge savings. I don't want to give people the misleading, it's pennies on the dollar. There's
1 minute
forms and things like that. We have to review your information, but it's a great program if you qualify.
Yeah, and I think that my takeaway from this discussion, Rich, is that the critical thing that everybody that needs to do, that if you have any tax problems or if you've had them in the past, you're not sure where they are, is figure out what your options are. Because if you can wait the 10-year statute because you're almost there, if you can set up a payment plan, if you can do an offer, you need to know what and it doesn't mean you're going to immediately do this, but if you know what your options are, you have a game plan, you know kind of where you are and you know what you can possibly do, and you know how much is it going to cost, how long will it take. But I think the game plan to me just seems like the biggest peace of mind is at least you know where you can go and what direction you can take.
Yeah, definitely deal with it, and I can help you, please.
All right. 855-500 Trust has been great. Rich, thanks for being on the show again today. Always being our tax expert. We'll talk to you tomorrow.
Enjoyed it.
All right. Thanks, everybody. Talk to you tomorrow right here on the Word on Wealth.
Tell a friend about the Word on Wealth, featured since 1995. With financial solutions attorney Gary Quackenbush, an expert in estate planning, wills and trusts, and tax problem solving. Gary is past president of the California Society of Tax Consultants. Reach out to us. The Word on Wealth team of financial experts is here to answer your questions and help preserve your family's financial future.
The information you hear on the Word on Wealth is for general information purposes only. This program discusses general financial and legal topics. Seek legal advice from a competent lawyer for your individual legal needs.